Welcome to Checks and Balances. I'm Michael Vincent. This is James Blair. And this week we're joined by James Cochrane, a partner at Stace Hammond, who is everything crypto, to talk about the crypto boom.
So James, great to have you back again. I'm just referring to you these days as the crypto lawyer. James Cochrane, partner at Stace Hammond. Make sure to check out the previous episode if you haven't already. So last time we spoke about, James, how you got involved into cryptocurrency and the idea of where the idea came from. I guess the big question now is somebody wrote a paper. There was an idea of, you can't have two people buying the same movie tickets or Taylor Swift tickets, and there's probably a little bit of a lack of trust in the banks to an extent. How do we get from an idea to this huge industry which has now got serious money and people questioning, I guess, the future of finance?
Yeah, it's a great question. It's a very, very deep rabbit hole.
Yeah, we'll pull you out if you go too far.
Yeah. Could you cover that in one sentence? Yeah.
I'm a litigator. I like to talk, so you're going to have to rein me in.
It's good you're on a podcast then.
Yeah.
So I guess what happened is crypto was a real Wild West. There are a lot of shady actors. We talked in the last episode about how crypto was being used for, particularly Bitcoin, for illegal purposes in Silk Road and Dark Web, and that's because a lot of criminals are early adopters. But what happened is Bitcoin showed that it's pretty resilient, right? If we take a step back, this is something that just exists on the internet. There's no coins.
Yeah.
Right? There's no physical coin.
There's no bunnies yet with gold jackets.
No bunnies with gold jackets. No leprechauns.
Yeah.
Possibly a few prickly characters in the environment. But
leprechauns behind the computer.
Yeah.
So there's no coins, but I guess that because it's a young technology, it works out what the bugs in the system are, right? And the code that was used is, as I understand it, it works on encryption. There's something called the SHA-256 encryption algorithm.
Yeah.
Yeah, it's one of my favorites.
Yeah.
It's not a shade on 257 though.
No.
Anyway, it proved itself that it hasn't been hacked. Bitcoin hasn't been hacked as a protocol because it's so decentralized. So and it's the way it works is quite robust. So you have other threats that come from governments trying to ban it and things like that, right? What has actually happened is whenever governments try to ban it, because it exists on the internet spread over computers, it's quite robust. So if one entity bans it, then the other environments or countries that endorse it and support it, it's economics, right? It moves game theory. It finds the place where it's going to be supported.
Yeah.
And
can I ask you about that? Because this is a very long answer. Can I ask you about the idea of, say, when China they banned Bitcoin, right? Is that
China's constantly banning Bitcoin?
Yeah.
Done it 8 times.
So some people who are critics or unsure would go, well, what happens if all the countries in the world, keep banning these currencies? What would you say?
I think what would happen there is, I think it's unlikely because of game theory. There are going to be advantages. So what happened when China banned crypto mining? Basically, all those miners moved to other countries, welcoming places in the US in particular, like Texas, Wyoming. So that's kind of how it works. If there was on the odd chance that there was a massive, regulation, sort of simultaneous annihilation between all the governments, which I think is highly unlikely, it would still exist on the internet. It would probably get traded in grey or black markets because that's how it works, right? There's kids trading Fortnite. I understand. I don't play Fortnite. I'm not that cool, but
my brother is.
Yeah, they trade this stuff on the what's called the grey market. Right? They find a way to trade it.
Yeah.
So essentially, like if it's just like any other finance concept, right? Like if an industry is regulated or made less attractive, there is always a country who goes, or somewhere else that goes, this is quite an opportunity for us. Why don't you come sit up here, set up all these jobs, all this money, in the crypto example, moves over to another country, great for the local economy?
Well, I think if you just look at like a real life example of that is probably torrents, right? Back in the day. So like it was banned pretty much everywhere. Film industries and music industries were cracking down on it. So they literally just shifted the servers onto an old like defense platform or oil rig platform off the coast of like the UK and just
Pirate Bay.
Yeah, exactly. You know what I mean? So it finds a way to just continue.
That's right. And there is this fine balance between over-regulation and under-regulation.
Yep.
Under-regulation, you're going to have cowboys. And over-regulation, that's going to slow down the adoption, right? There's not going to be as many jobs created because of it. And I guess getting back to how did this thing become what it did?
Yep.
You know, people saw the opportunity with the technology. They saw that there was money to be made, and there were attempts to vary Bitcoin, to do it a little bit different. New protocols were created. Had a lot of because of the money that was being made. You know, there's the growth is it's going up thousands of % a year, right? It's going like this, but ultimately it's been up and to the right.
Yeah.
And that attracted a lot of really smart people. A lot of Silicon Valley people started moving out of Web 2, Googles and your Facebooks, and going, I'm actually going to have a crack at doing crypto.
Yeah.
With more regulation, there comes more secure offerings, right? You have entities like Coinbase, which are quite heavily regulated, who, they have I guess they take their security of their customers' crypto really, really seriously. They change and adopt, right? It's not like early days where some of these exchanges were literally running off one laptop.
Yeah.
These guys have military-grade protection for their offline storage. They have teams of people working on security. They have hacker bounties, to people, help them identify weaknesses in the code and things like that.
Yeah.
It just, because of the security, and I guess that encourages people, it gives people more confidence. Okay, maybe it's not just this funny internet money. And then you get these really big asset managers and investors, guys like Paul Tudor-Jones, Bill Miller, like famous hedge fund guys, coming in saying, I'm just going to allocate a little bit.
Yeah. And that gives it that sort of Wall Street stamp, right? Like, we're in it now, so yeah.
Do you think that was one of the big switches over the last few years? Was that like that big firm money, that big investor money that, it legitimizes it quite a bit, right?
Yeah, absolutely. And I guess that is something that appealed to me about it. You have big funds like Fidelity, who create their own Fidelity digital division.
Yeah.
Guys like Mike Novogratz from Galaxy Digital, leaving big hedge funds. I think he was at Fortress to basically focus on crypto development. And there's just a lot of VC money, guys like Andreessen Horowitz. I think their crypto firm's called A16Z.
Yeah.
They're pouring early adopters, guys who made tons and tons of money, things like early investors in Facebook and stuff like that. Just, that's where they are spending their energy. That's how they're spending their money and their time. And that just helps build the ecosystem. Yeah. It encourages other people. But also, I guess, there's the accessibility of it. before platforms like Sharesies, Robinhood in the States, you had to go through a broker. The broker had to buy all your stocks for you. This allowed you to do it yourself, and to not have to pay a broker a fee of whatever return you could get. And yes, that's pretty appealing to some people, that they can actually manage their own portfolios and give it a crack themselves.
Yeah, and I guess that's sort of the rise of cryptocurrency and the legitimization of it, and then the popularity in such a small space of time is really just a microcosm of other financial assets, shares, and all these sorts of things, but which has just played out over a much longer period of time.
Yeah.
Mm-hmm. So where did we get to? Like, so the big money started to come in. Now you're at the barbecue, and your 13-year-old nephew's like, mate, I'm worth $14 million. And I've made it
3 Lambos out back. Yeah, you should see my Fortnite skins. Yeah.
I don't even have a driver's license. I'm too young.
Yeah. I've made it in the last 3 weeks. I'm deep in the game. No, how did we get from...
That's actually a thing. There are kids as young as 12 who are earning decent amounts of money minting NFTs, playing Axie Infinity, which is an NFT metaverse game. That's a thing.
Yeah. But how did we get from... So, they're unicorns. They're quite unique. How did we get from the big money, the early adopters, to now it essentially being mass market with, you talk to a lot of people, and I know we went to an event maybe...
Crypto vs. property?
Yeah, 6-12 months ago, something like that. With the lockdowns, you get a bit confused with timeframes. And the people who were there were, 30-year-old lawyers and doctors and plumbers, and it was such a wide range of sort of people who traditionally, maybe a few years ago, would not have been considered crypto people.
Yeah.
How did we get to that point where it became so mass market?
Yeah, I think a big part of that was Ethereum and how it's a bit different to Bitcoin. There's a lot of different cryptos, but Ethereum had, and I might be wrong about this, but one of the key reasons why Ethereum's been successful is because it allows people to build decentralized apps on top of it, right? And some of the dApps that were being built are called DeFi, decentralized finance, and that allows people to essentially just cut out a broker with the code, just borrow against their crypto, and then there was this big DeFi boom. They said that 2017 there's this ICO boom. Also, that was sort of spin-offs of Bitcoin and Ethereum and other projects being built on Ethereum.
Yeah.
And Ethereum also created the ability to do NFTs, digital collectibles.
Yep.
And that's really, really taken off in the last few years.
I don't want to do NFTs just yet because we're going to go down.
Yeah.
The Ethereum piece with the being able to build things on top, to me that really makes no sense.
Yeah.
Can you give me like the most basic definition of why that matters?
That's quite a tricky question because I'm not a tech person.
Yeah.
But I think, for example, a lot of the projects that get built, they will often have their own token, right? So an example is Uniswap, right? So Uni has a Uni token, and you'll see that on the crypto markets. Uniswap is just a means of using crypto. It's a use case for the crypto. It's basically like a broker, but rather than like a stock market, like the NZX or the S&P, 500. There's not hundreds of Wall Street guys, doing trades.
Yeah.
It's done with the code.
Yeah.
Right. So there's people behind it who are building to make the product. But it's the people using it see the use case, they put the money into it.
Yeah.
And crypto follows this, what some people have said, follows this thing called Metcalfe's law. So with computers, there's something called Moore's law, which is basically where the computer itself gets smaller but more powerful.
Yeah. So it halves, the size of the chip halves every, I'm going to get the time frame wrong, but like 3 years or 5 years or something.
Yeah. I'm not sure exactly. But basically, across this time period, our computers, our mobile phones have got a lot more powerful. And remember, you don't have to have a bank really to run the stuff. You just have to have a phone and an internet connection or a laptop. But getting back to Metcalfe's law follows, I guess, the growth of networks. So basically it's adoption of a network by users, how much is being transacted on it, and at the moment, crypto is sort of exceeding the rates of adoption of the internet.
Yeah.
And people
They're
see
crazy
this.
numbers, right?
Crazy.
I mean, you were telling me over the phone the other day about was a crypto transaction versus like Visa or MasterCard? What was...
Yeah, so last year the Bitcoin network did more in terms of volume of transactions, volume or amount of transactions than Visa.
Yeah.
It's a pretty crazy concept.
It's pretty crazy. I think what you've got to consider with the growth as well, though, is that the word of mouth is the best marketing, right? And you really can't shy away from the fact that a lot of people live online now, like a large majority or percentage of their time is online. And when you combine the fact that everyone spends a lot of time on particular websites or message boards or these sorts of things, and the information is readily coming at them, is that fear of missing out, right? And you see some people making these huge gains, and all the I got rich, I did this, and then that fear of missing out sparks people's interest, right? Like, what is this? Well, a lot of people into it. I should be into it.
Yeah, totally. And I think the pandemic just accelerated that.
Yeah.
It's a really good point in this as well in terms of the acceleration of growth, right? That must have played a huge impact in terms of not just cryptocurrencies, but, the evolution around sharesies and working from home and all of these things.
Absolutely. Like you saw a jump on, with platforms like Robinhood and Sharesies.
Yeah.
I think it was the first time that there were more retail transactions. So, people like us rather than fund managers, wholesale market, who were, so there were more transactions, more money being spent by retail people. And in part, that was because of that access point, right? It's because they're trapped at home and also worried about the future.
Yeah.
You're going, I've got a young son, and I think, okay, well, what's it gonna cost, to send him to school? He's got a young daughter now as well. Same question, but that gets you thinking. If I put this money in a savings account for them, are they going to get 0.1% interest?
Yeah.
Right?
Take inflation off that, we're going backwards.
We're going backwards in a big way. I mean, if you say inflation is 7%, I'm not sure what the RBNZ's figures are, but some people would argue that inflation is actually a lot worse than that.
Yeah.
Right? So because you're only counting particular things.
Yeah.
But I guess it's that opportunity to, some people are getting desperate. And they think, maybe I have to try something more speculative.
It's an interesting, as a financial advisor, it's also an interesting place for people to be coming from. I mean, they're exploratory and they're learning new things. That's one thing. But so on the next episode, I'm very keen to be talking about the whole FOMO piece versus why people invest into the product, the returns going forward. Are they going to be at the same level of what we've seen historically as a market continues to mature? So make sure to subscribe to our channel, give us a review, and we'll see you next time to keep talking all things crypto.
Cheers.